The next session on navigating labor code effectively to be presented by Aparajitha Corporate Services, Mr. Yatin Chaudhari, Business Manager for West Division.
Very hot topic, and entire industry in the discussion, in the struggle, so many interpretation, so many opinions, and in that all are confused whether to do it, whether to postpone it. So I am going to cover the basics, the background, the current position, and the advisory. So can we proceed? Okay. So this labor code, this is not the new topic which need to be discussed. It initiated in the year 2002 by the Verma committee, and certain advisory given to the central government for the purpose of reframing the labor codes, reframing the existing legislations which are very old. Some of them are 100 years old, some of them 80 years old, some of them are 50 years old. So it was expected that the recommendation of Verma committee will be implemented. However, it took more than 20 years for the purpose of implementation. Earlier it was segregated into 5 segments: industrial relation, wages, social security, safety, welfare and working conditions. However, at the time of implementation, now it is converted into 4 codes. So you all are aware that 29 labor legislation which are centralized in nature, central legislations got subsumed into 4 labor codes. So first labor code is Code on Wages 2019, that is it got enacted in 2019. So 4 codes: Minimum Wages Act, Payment of Wages Act, Payment of Bonus Act and Equal Remuneration Act got subsumed, repealed and converted into 1 code, that is Code on Wages. Similar fashion and manner, other codes: Social Security 2020, of Occupational Safety, Health and Working Condition Code 2020, and Industrial Relation Code 2020. So altogether 29 labor legislation which are central in nature got subsumed and converted into 4 codes. Now this particular legislation got enacted in 2019 and 2020. So it's been now more than 5 and 6 years. This particular legislation got the consent from the president. However, it took 5 to 6 years by the central ministry, central government to issue the notification for the effective date. So few of them already got clarity, few of them the certain clarity is still awaited. So I will take you through. See, the time frame is 20 minutes, and in that 20 minutes to cover all the 4 codes, that is 29 legislation which got converted into chapters, it's difficult. So I have chosen certain topic about financial implications and the provisioning which need to be done, and certain advisory which are essential in nature. What is going to happen after the implementation of the code? One is that the penalty got rose, it is higher inside. There are certain aspects which are to be considered as a level playing field which is expected to be implemented. Ethical employer behavior which is expected after the code, because whatever the provisions which are mentioned in the labor codes, all the definitions are similar in nature. This is first time happening in the Indian labor code assignment where various labor legislation having common definition. So that the confusion which was there earlier, each and every legislation which need to be tested individually, independently, has got eradicated. So now when this particular code got implemented, so there are 29 legislation and other central legislation are not the part of the code. And the beauty of this particular code is only the central legislation are the part. So all the legislation which are in state legislation nature are not the part of any of the code. So the status quo will remain same for those legislation. For example, the profession tax, labor welfare fund, Shop and Commercial Establishment Act. So those legislation are not the part of the any of the code. So all the provisions which are there in the state legislation, the status quo will remain same. Few statistics I have brought here for your easy reference. What is going to happen after the implementation of the code? So in the code on wages, as you could see in earlier provision, the number of sections, the number of activity under rules, the definitions, the returns, the registers, it is drastically got reduced. So the intention of this implementation of the code is the ease of doing business which is there on the paper to be implemented in actual. The ease of doing business which was there on the paper to be implemented in actual, so that various procedural compliances which will get eradicated. Various procedural compliances which will get eradicated in terms of providing central legislation with these certain licenses, certain registers, certain forms, certain procedural compliances which will get reduced, and it will give that easiness to the employer and the employee both. That is the expectations after the implementation of this particular code. Now when we are implementing this, so what is the actual impact? And the major impact is financial impact. Every employer, every organization is more concerned about the financial impact. So the majority of the portion of this particular session, I am going to take you through what is that impact which is going to happen after the implementation of the code. You all are aware, on 21st November 2025, Central Ministry has notified through the Gazette that the effective date of all the codes is 21st November. There is no other timeline has been mentioned. There is nothing which is to be given as a time frame for the employer for the implementation. So it is to be considered that all the provisions which doesn't have any direct dependability on the rules to be framed are to be accommodated by the employer on immediate basis. So what all those area where you need to pitch in, where you need to revisit your structural changes, that I am going to take you through. So the important topic here is the definition of wages, and the definition of wages is going to impact you directly, indirectly for the purpose of various social security benefit and the statutory benefits to be extended. So in that scenario, all the codes in this particular section, the definition is common. So what is this definition? The definition having 4 parts. One is substantive, inclusion, exclusion, and the proviso. So anything which is payable to the employee to be considered as a substantive component for the purpose of deriving to the conclusion what is to be considered as a wages. So in that they have considered basic, dearness allowance and retaining allowance as a inclusion component, and from A to I there are sections where they have considered the exclusion component to be considered. So if it is my remuneration is X, then what is to be considered as a inclusion, that is basic, dearness allowance and retaining allowance. What all those component to be excluded from the wages, that is to be considered from A to I. So what is A to I? Commission, conveyance allowance, housing rate allowance, and all other components, that is defray allowance. So these are the components which are categorically they have mentioned for the purpose of exclusion from your salary structure. So when you are considering this particular definition for the purpose of your implementation of your salary structure of your all employees across the board, irrespective of the designation of the employee, you need to make sure that the component, the salary structure, the nomenclature of your salary should be in line with the definition. Until and otherwise, if it is not, then it needs to be tested on the definition. Until and otherwise, if you will not test it on the definition, you will be paying either deficient or short payment or wrong payments in the form of social security or in the form of statutory. So the proviso is very much important. That is the 4th part of the definition, which talks about the A to I. If it is exceeding 50% of your total remuneration, then the portion which is more and above 50% to be considered as a wages. So to take you through, to make you understand what is that the salary structure I am talking about, let us go to this particular understanding first. What is remuneration? As I said, substantive part, inclusion part, exclusion part is all together is your remuneration. What is to be considered as a wages? The remuneration, that is substantive part, inclusion part, exclusion part minus exclusion part will be considered as your wages for the purpose of all social security benefit, all statutory benefit to be extended. So in that scenario, there are certain judgments earlier, like air freight judgment under Minimum Wages Act. So what was that? Earlier the judgment was talking about if it is your gross is equivalent to or more and above minimum wages of the respective state, for the purpose of minimum wages you are complied. That position now become null and void. For the purpose of Minimum Wages Act, for the purpose of your gratuity, for the purpose of your provident fund, for the purpose of your ESIC, for the purpose of your payment of wages, everything need to be tested and everything need to be considered as a under definition of wages. So earlier the gross which was considered as a complied for under the Minimum Wages Act is become null and void. So now you need to refer the definition, your minimum. See, the problem here is now when the notification on 21st November came, they have excluded certain sections under Minimum Wages Act, because the floor minimum wages, the central committee which is supposed to provide the floor minimum wages is not yet notified. Basis on that floor minimum wages, respective state and central government will finalize their minimum wages, that they will be notifying it. So until and otherwise it is not there, the earlier provision will continue. However, for the purpose of implementation, the code on wages definition to be considered. The moment it will be notified through floor minimum wages, that is to be considered. Now there is another judgment where they under Payment of Gratuity Act, earlier the principal employer was held responsible. Now based on the current provision, he will not be held responsible. That is the provision. The reason I am referring this particular case studies, that is going to help us in the upcoming discussions. So there are certain judgments, Bridge and Roof case, Vivekanand Vidya Mandir case, Montage Enterprise 2011, Surya Roshni case, recent judgment given by the Supreme Court in February 2019, and Marathwada Gramin Bank Karmachari Sangha versus Provident Fund. So this particular judgment, why it is required, why it is to be considered for the purpose of discussion, I will take you through once we will be discussing on that. So how does that code on wages is going to impact you? So there is one structure which I have taken for the purpose of example. After the implementation of the code, earlier the salary structure was like basic, HRA, conveyance allowance, commission, and the total salary was 18,000. But after the implementation of the code, the conveyance allowance, commission, HRA has become the exclusion component as per the definition. So whether the structure is in line, the answer is no. The total salary is 18,000, total remuneration. Rather on salary we can mention total remuneration is 18,000. However, after implementation of the code, it's become 6,000. That is only basic which is there for the purpose of inclusion component. So whether the salary is in line, the answer is no. So you need to revisit the salary. You need to make sure that your salary structure will be in line in such a way that the component which are excluding in nature should not exceed more than 50%. Another example for the purpose of minimum wages, there are three cases which I have taken. One is basic salary, another is dearness allowance, one is consolidated component in case 2, and another component is HRA in the case 3. Let's, for the purpose of example or for the purpose of discussion, let us assume that the minimum wages of the respective state is 12,000, and for the purpose of implementation there are three different salary structure which I have taken. For the first case, the basic and DA is equal to 12,000. So this particular salary structure will be considered as a complied because there is no excluding component in their salary structure. Second case, it is just a consolidated component, there is no segregation, and he is considering entire 12,000 for the purpose of social security benefit or all statutory benefit, that is to be considered. But in third case, you can see HR is considered as a 2000 rupees. Now in the definition, house rent allowance is excluding component, but the minimum wages of the respective state is 12,000. So for that purpose, this particular third case, it is non-compliance. So he need to revisit the structure. Now, this structure I have taken for the purpose of again discussion, where various other components are available. Now you could able to see what is the take home, what is the total month remuneration, what all those components which I have mentioned here. Under code, what is to be considered for the purpose of shifting this particular salary structure to one component to another component. So if it is, you are not shifting it, so that particular component will be considered as either excluding component, or you will landed up in paying this particular social security benefit or statutory benefits, whatever you need to remit to the department, you will fall short in particular salary structure, and you will landed up paying interest, penalty, damages. Now in this structure, after this particular implementation of the code, which all those components to be considered for the exclusion, which all those components to be considered for the inclusion, you need to test that under the definition. You cannot simply put any nomenclature for the purpose of inclusion and exclusion. Please understand, that component need to be tested for the purpose of all social security benefit, statutory benefit to be extended, and based on that only it can be finalized, not before that. Again, one example, basic 36,000, HR 12,000, conveyance allowance 8,000, commission 4,000, all together is 60,000. His basic, which is there in the particular inclusion component, is already exceeding the 50%. So whether this particular component to be considered, the answer would be yes, because other components which are excluding in nature are less than 50%. You are very much aware that there is a wage ceiling, that particular discretionary powers given to every employer, so that he can limit his provident fund on the wage ceiling, that is 15,000. In 2014, the notification issued by the Provident Fund Department, where they have notified the wage ceiling, that is 15,000. If it is you are considering that particular wage ceiling for the purpose of implementation, you can go ahead and do that. Those who are contributing on the entire wages, they need to be very much alert for the purpose of implementation. Otherwise, what will happen, they will landed up paying either short payment or the wrong payment to the department. Any claim which will be given by any individual, it will land up you into the investigation. Enforcement authority will investigate, and if it is you will be not able to substantiate the component and the policies, you need to revisit it for the purpose of disbursement, and that is to be done from the effective 21st November 2025. The reason I have shown you certain judgments, the judgments, the first four judgments are related to your component which are universally, necessarily, ordinarily in nature. If it is your component is universally, necessarily, ordinarily in nature, you need to disburse that particular provident fund contribution, considering that as a basic wages. Those are the judgments given by the Supreme Court. In 2000 recent judgment, that is Surya Roshni case, in 2019, once again Supreme Court reiterated the definition of basic wages, stated that anything which is there, which is being paid to the individual in in nature, that is universally, necessarily, ordinarily in nature, that is to be considered as a wages for the purpose of provident fund disbursement. In that particular context, there is another judgment, that is what Maratha Gramin Bank Karmachari Sangatna, where they have reduced it from the actual basic to 15,000 wage ceiling, and they won the case. So if it is you are contributing your provident fund on the entire basic or the wages as per the current code, then you can definitely revisit, but you need to make sure that how you are going to proceed with it, and the implementation and the implication that needs to be understand basis on the provisions, and then you can proceed ahead. ESIC, very hot topic. There are many confusions that after the implementation of the code, what is going to happen. You are very much aware that in the definition of ESIC earlier, the provision was the entire gross to be considered for the purpose of deriving to the conclusion whether that employee is coverable or not coverable. So, if it is 21,000 gross and less than that, the individual was coverable earlier. Now that position is got changed. It is to be considered as a wages. So, anybody drawing, even though gross salary more than 21,000, if his wages, that is whatever the component you are going to consider for the purpose of your calculation are less than 21,000, you need to revisit the particular individual. Many people will get accommodated. If it is for the rough discussion, my gross salary is 42,000 and I am considering 50,000, 50% as the wages, that is 21,000 if it is there, that individual is become coverable now and you need to contribute it. And it is not from April 2026, it is to be effective from 21st November 2025. So if it is you have not done it, tomorrow you will ended up paying interest, penalty, damages by contributing ESIC, and you will not be able to generate the IP of those coverable employees because you are very much aware there is a window of 10 days for the purpose of generating IP. So please understand that. Maternity benefit impact. So as definition of wages, there is an impact and there is a benefit to the organization employer, that the benefit they used to extend it, that is on the entire gross earlier, they can reduce it to up to wages as per the definition. Many organizations have taken the stand, they are not going to reduce the benefit to the individual. However, the law is permitting them to reduce it. Overtime calculation, again, it was from day one, it was on the gross, that means the daily fixed wages. Now it is on the wages, that means on the 50% of whatever he is earning, accordingly you can calculate. But you need to make sure that the component need to be tested whether it is falling under inclusion or whether it is falling under exclusion. Only after that you can take a call. Leave encashment, again the impact is getting reduced. Employer is happy that they don't want to disburse the leave encashment on the entire wages. Now they can reduce it to up to 50% based on the salary structure and the component. So that is the benefit, now it is extended to the employer. Bonus, the status quo remains same, the wage selling as of now 21,000, but for the purpose of implementation, the wage selling, that is 7,000 or minimum basis, whichever is higher, is going to get changed. Please understand. Gratuity impact, same, go by the definition. If it is somebody left after 21st November, you need to revisit the calculation and need to disburse the gratuity. If you have not done it, you need to revisit along with the interest. That is 10% simple interest. So suggestions would be salary structure to revisit, policy to be revisit, your appointment orders to be revisit, your appointment orders given to the fixed term employees to be revisit, your contracts with your vendors to be revisit after the implementation of the code. It is going to help you to reduce your components. There are many areas where you are considering for the purpose of income tax, but please make sure that while considering those structure for the purpose of income tax, it should not impact to you for the purpose of various statutory and social security benefit. Please consider that. We are falling short of time. It's a very big subject. To be accommodated within 20 minutes is impossible, but the large impact I tried to accommodate. Thank you so much.
Thank you so much, Mr. Yatin Chaudhari, for that wonderful session. And ladies and gentlemen, I think we deserve another big round of applause for him. Fantastic session on labor codes and how to navigate them effectively. And now, to felicitate our honorable speaker, I would like to call on stage Mr. Chakrapani Atmakur, Senior Vice President, Human Resources from Mahanagar Gas Limited. A big round of applause to Chakrapani ji for doing the honors. big round of applause once again for Mr. Yatin Chaudhari, Business Manager from Western Region, from Aparajitha Corporate Services, on that wonderful session on navigating labor codes effectively. Yatinji, thank you so much for that knowledge session. We really appreciate.